Economic growth is bouncing back from Queensland's devastating floods. Figures released just a short time ago show the economy is on the mend after a poor March quarter. Gross domestic product for the 3 months to the end of June is up 1.2%. That's 1.4% for the year and stronger than forecast. Bill Evans is the chief economist at Westpac. Bill, what are the GDP numbers telling you?
Yes, Nicole, up 1.2%. That's around about where we expected the number to be. But I think the key points that came out of it, the first one was that consumption, that we expected to be quite soft, given that the retail sales data had indicated they'd only grown by 0.3%. In the national accounts, retail sales are up 1.4%, with consumption being up a total of 1%. Part of that is a different way of measuring it, but the main part is that the retail sales data in the national accounts measures money that people are spending offshore, and clearly that doesn't help growth because it just comes straight out the other end in terms of imports, but it makes the consumer spending story look a lot stronger.
So retail's not doing too badly, but you mentioned growth. Will those figures put pressure on interest rates?
No, they won't put pressure on interest rates to go up, certainly. Would they put pressure on them to go down? No, there's not enough in here to say interest rates will go down. Bear in mind, these are very backward-looking numbers. They're for the quarter ending June, and since then we've seen a big further deterioration in confidence and a great level higher of uncertainty. We also saw that the investment cycle is still pretty slow, particularly in the mining side. So the problem with the mining boom is that whilst the expectations are strong to spend money, it's proving difficult to actually get the projects up and running with all the capacity constraints. And bear in mind that the 1.2% growth, 0.8 of that was coming from a build-up in inventories.
Bill Evans, we've seen the dollar jump on the release of these figures today. Is that going to put more pressure on Australian manufacturing?
Look, the key factors for the dollar remain the strength of commodity prices. We don't expect to see any major correction in commodity prices, so manufacturers have to learn to adjust their businesses to live with this dollar around parity or a bit above.
Bill Evans from Westpac, thanks for joining us.
Thanks, Nicole.